Good day, everyone. Well, the US and UK tend to move together, with the US leading when it comes to economic cycles. And this also applies to the rest of the world, even when one looks back through the centuries. While the world is more interconnected than ever, connectivity has always existed, which explains why global recessions are not coincidental. The Bank of England recently hiked interest rates by 75 basis points to 3%, and that was the biggest rise since 1989. The bank warned the UK is facing its longest recession since records began, saying the country would face a very challenging two-year slump with unemployment nearly doubling by 2025. Now, that's in keeping with past recessions in the US and UK, as unemployment always soars from major lows over at least several months as the recession takes hold. By raising rates, the Bank of England is trying to bring down soaring inflation as the cost of living rises at its fastest pace in 40 years. The issue is that this has little impact on supply side inflation, which has been a big driver of inflation in this cycle. For homeowners in the current environment of rising rates, owners coming off fixed rate deals could see their interest payments increased by around £3,000 a year in Britain if they need to take out a loan that is 3.5% percentage points higher. The UK Shadow Chancellor Rachel Reeves said families could not withstand such high rate rises when we've got rising food prices, rising energy bills, and now higher mortgage rates as well. The global macro environment, which is arguably the worst over the last century, naturally includes the US. But with the Fed suggesting less aggressive rate hikes, the dollar and 10-year treasuries may have peaked for at least a little while. A lower overall yield would suggest lower inflation, just as rising yields predicted higher inflation so far this year. But Powell's hawkish testimony about a higher terminal rate means more interest rate debt will need to be paid on the still near record levels of debt that exist. So the Fed will then have to print money to service the debt, much as we saw happen in the UK with the Bank of England. This financial trick by central banks enables them to hike rates while also doing a QE light. The US Treasury pumped $165 billion into the economy since the start of October, just as we were heading into midterms. And this more than cancels out the Fed's $90 billion per month in QT. But that said, due to the prolonged higher terminal rate, though with the CPI number, now we're looking at a terminal rate that is going to be a little less high than it was before. Still high, though. This form of money printing to service higher rates of interest might be like a Chinese water torture, a slow process where markets drag for a time. So maybe we see a lot of chop and slop ahead without any firm prolonged trends in either direction, especially since today's CPI came in below estimates across the board. The CME Fed futures now puts odds of a 50 basis point hike in December, followed by a 25 basis point hike in February at the most probable. And so we're seeing a lower terminal rate. Now, instead of 500 to 525, we're seeing 475 to 500. So the uncle moment of capitulation, where markets engage in a firm downtrend, much as we saw in late 2018, may be further down the road. Indeed, the Fed may be able to coast along in this manner for many months, but ultimately the massive QE bubble still needs to be unwound. So I would expect a major market low at some point, especially, well, perhaps sometime in 2023. If the years 1930 to 32 and 2000 to 2002 are any guides. But of course, if we do get that black swan event before we know it, that could force the Fed to print like they've printed back in 2008 or in 2020 from the pandemic. Then it's off to the races again. So we'll have to sit tight and see for ourselves what unfolds in this never-ending tapestry of drama that are these markets. And I'm sure we all know about the crypto situation with FTX and another massive exchange going down. So at any rate, Gil, how are you seeing everything?
Yeah, this is a crazy market, and we've been saying that it's not a trend followers market, and it's you really have to be on top of things if you're going to swing trade it. And I think, we're participating today because last week on, I think it was Thursday, we issued undercut and rally reports on silver and gold. So basically, we had a moving average undercut and rally here. It's also a little mini undercut and rally through this price low on the PSLV, which is the ETF we favor because it is theoretically directly redeemable for gold. Now you're going to notice, or gold and silver, both the Sprott physical silver and gold trust. But here you can see the PSLV now is running right into the 200-day line. So that's kind of interesting that this was presaging. It may have been presaging a benign CPI number today, but it was only what was it, Chris? Like 0.3 versus
Point two.
0.5?
Yeah, exactly. Everything was 0.2% below estimates across the board.
Yeah, so, I don't know. I think part of this also is that everybody got short yesterday because of the FTX thing, thinking it was going to lead to some kind of a black swan blow up today. And yeah, there are a lot of hedge funds like Tiger Global, and you got banks like SoFi, and BlackRock is in there with big ownership of this. And I think somebody announced today that they dumped they took a big write down. I think it was a hedge fund based in Palo Alto. I think it was Sequoia Management. That was the one. Yeah. In any case, actually, I take that back. That's not in Palo Alto. That's in Menlo Park and Sharon Heights, actually. In any case, so that I think got everybody leaning heavy short. And the interesting thing is that I was living in my own little world the past couple of days because the metals have been moving. So those have had good moves. So that's a good what is that, 20% move right there in 5 days. So so we've been participating there, but we don't have to worry about what the number is, the CPI number. We just go with what we see in real time. And as it turns out, that was never stopped out, and it worked. On the PHYS, we had the undercut and rally through these two lows. This low, I think, is 1250. This is 1252. Dropped just below it in turns. So we put out a report on that day, and you're up from what's the low here? Like 1250 up to 1340. What is that, Chris? Like a 9% move. So those are decent moves over the last few days, and we didn't have to worry about what the CPI was or wasn't going to be, especially after yesterday, because you're up and you can hang out. So for example, the PHY is pulling back yesterday, but you've got your 50-day line as your trailing stop or selling guide, unless you think you're going to want to sell into the strength. I think today may be the day to sell into the strength. That's just my instinct. I could be wrong. But if you look at some of the miners now, of course, they're going to leverage the moves in the metals much more. But a lot of these had viable gap ups last week, but it wasn't clear whether this was going to be playable or not. However, it was still viable. And then yesterday, and not yesterday, but Monday or Tuesday rather, in GFI, this is one I follow very closely, and I've talked about it before in the webinars. That one and Anglo Gold Ashanti. These are my two favorite gold names. But Goldfields was supposed to buy Yamana. And I think it was last Thursday or Friday, Agnico Eagle Mines, in partnership with Pan American Silver, announced that they were making a better offer for Yamana. And so that took some of the heat off of Goldfields, but it really didn't get going until yesterday or Tuesday morning, when Yamana came out and actually said, yeah, we're rejecting the Goldfields offer. And so if you look back in May, Goldfields are trading above 12, and it gapped down on the news of a Yamana buyout. And so now what it's basically doing, I think you have hedges unwinding. So it's basically trading back up to the levels it was at before they announced the buyout. So that's what's going on there. But the whole space is on fire. And of course, it's continuing to move higher today. My feeling was, I thought selling into the moves yesterday, at least partially, made sense. Of course, now I wish I just held on to everything, but you can sell the rest of it today, I think, unless you see something like AU hold the 200-day line. But my guess is at this point, this is way extended. So yeah, why not take profits? Same thing goes with the metals. So, we're in there, but it's not easy. So anybody who thinks this is an easy market is sadly mistaken. And again, we'll say it again. If you're a trend follower, and you're more of an intermediate term investor, there's really nothing going on here that you can play. It's just craziness. The Dow's the leading index, and I remember Bill O'Neill used to talk about Dow props, that when they're trying to make the market look better than it really is under the surface, they'll prop up the Dow, and it's been the leading index, 30 stocks. But when you look at the NASDAQ, it's still chopping around in a big sideways range that's extending back to middle of September roughly, and you've gotten back above the June lows, but you're running back into the 50-day line. So, there's really nothing here either. And what are you going to do? You're going to buy, the miners are looking good. So, but they're extended, and you had to buy these with the metals last week, in my view, or at the very latest Monday or Tuesday of this week. And if you're looking at anything else, you can pretty much throw darts because they've got everything running. So, everything's gapping up. But you look at something like Google today, Alphabet rather, you can see it's stalling out at the 20-day line. Amazon pushing up, but it's so far down there that, an oversold reaction rally is normal here. Maybe it runs into the 20-day line. I don't know if it goes further than that. We'll see. But that's basically what you're looking at. You look at Apple running into the 20-day line. It's stalling there. We can look at Booking. This is kind of gapping up. It's still stalling in a range there. Cisco actually reversed off the opening highs. And I'm just running through some big stock NASDAQ names. Intel is back at the highs of its range. About a 2-3 week range. Meta Platforms up into the 20-day line. Microsoft up into the 50-day line where it's stalling and churning. So for all we know, these become short sale entry points. And I think what I would be doing here is watching. So if you're watching, let's say, okay, this would be a possible strategy here. If we're looking at Apple, okay, Apple running into resistance at the 20-day line, right? Okay. Alphabet running into resistance at the 20-day line. Microsoft running into resistance at the 50-day line. Amazon running towards the 20-day line, might run into resistance there. Let's look at a few others. Tesla, which has been getting bombed. All it's doing is a little rally, not anything actually. Netflix pushing back above the 200-day and the 20-day, but overall the move isn't that impressive, and it could reverse back below those the moving averages rather, and trigger a short sale entry. So if you're seeing all these names and if you monitor them all together, then one way to play it as a short, if the market reverses, is using the SQQQ. So watching this right now, what we can see is that you had a MACD cross in here, but that was a little higher. So it's come down a little bit more, so it's not really holding up. The moving averages are starting to flatten out, so maybe it'll try and turn here, but no guarantee. But that's something to watch for. And you watch it in conjunction with watching the daily charts of the big stock NASDAQ names. You could do the same thing using, say, the SOX L, for example. So if we're watching the SOX L, you can see that's just trending higher. You had a big move after the CPI came out, but notice just a slow chugging, churning move higher. So it's pushing higher, and so we reverse that on the SOX S, which is doing the opposite. You're also trying to, get a MACD cross here, but it's not really holding up. But if we go and look at the group now, whoops, let me get here. Let's go look at my big stock semiconductors here. You can see you got AMD running into the 50-day line, Analog running into the 200-day line, Applied Materials kind of in no man's land, so nothing going on there. Same thing with Broadcom. Intel, again, pushing up to the highs of this current range. KLA 10 cores gapping above the 200-day line. We'll see whether that reverses there. Lam Research pushing into the 200-day line. Lumentum just heading lower. Marvel just past the 200-day line. Microchip gapping up into higher highs. So we'll see how this plays out. Micron, same thing. So a lot of these are less definitive than, say, the big stock NASDAQ names. So if I was going to look at something to jump on if the market reversed, I think the SQQQ would be a candidate. But that's just something to watch for now because it's not really clear, where we're headed. The Dow's up, 900 right now? There we go. The NASDAQ up 5.8%, up 600 points. I don't think, Chris, you recall ever seeing the Dow open up 900 points?
Years ago. Well, I mean, that on a percentage basis, yes, but in a point basis,
Yeah.
that's very rare.
Okay, now here's Celsius Holdings. Someone's mentioning, yeah, that turned into a short at the century mark. Bingo. So that's one example of something could have been shorted. Run also, I think that reversed at the 50-day line and it's hanging. So you can see also some of these stocks are not really holding up. So my guess is this is a bunch of short covering, and it'll run its course, and then it's possible that either later today or tomorrow you'll see things come in, and you'll be able to short things. But to be long into this, the only thing I could see being long would have been precious metals and precious metals stocks based on the setup seen last week. But even that's tenuous, because had the CPI come out even or say 0.1 above expectations, you would have seen these things get hammered. So that's what you're living in, sort of binary news-oriented environment. And I think the only strategy that I can come up with now is watching this rally and seeing if I want to short into it, sell any longs you have if you're long precious metals or precious metal stocks, and then work it from there and just see how this thing goes. Any other questions? 20471 could possibly be a double top short for SMH using SOX S. Okay. I mean, through here, yeah, this level could be. You got these levels up here. Isn't it? SOX S is that? There we go. Yeah, I see. That's one way to do it. That's breaking down. But yeah, you could get like an undercut and rally through this low, which would correlate to a double top reversal through this peak here, I believe. Let me see if I got that right. Yeah. Well, no, actually, you're down here, so that's early September. So that would be this peak here. You're not quite there yet on the SMH. But again, these are things to watch for. So, I just think you'd be alert to it. If you're already in PSLV and PHYS, well, great, you're making money today. You might think about taking some profits based on the position. So basically the PSLV at the 200-day line, the PHYS, if you look at this, it's actually in a little double top type position along this high here, just above 1340. So that's another possibility. So, it's just another crazy day. I don't really have much to say about any of this because I think right now you're just watching to see where things potentially rally into resistance. Most of the miners are pretty well extended at this point. I don't know if some of these things become shorts, but it's been a very fun ride so far this week, for the past week, in the metals space. You also have a lot of movement in some of the industrial metals because they're commodity related, and some of these are going crazy. But again, you really can't jump on them now. It's very difficult. So that's what you're left with right now, is either watching to see if this becomes shortable, or if you get a pullback, maybe things set up again, and maybe you can just sit with the metals, the precious metals, and hang out and see where that goes. Because if this is really presaging a Fed pivot, then I think silver and gold will shoot higher. So I'm not sure. I would expect Bitcoin is participating today on the upside, but I think the thing with FTX just highlights the whole problem with crypto as I've seen it, which is that it's just the whole space is polluted with a lot of BS, and I think FTX is one of them. I mean, you can go back and look at a Bloomberg interview with Sam Bankman-Fried, and he basically is admitting and describing how they pay people with this yield farming thing. He's basically describing a Ponzi scheme, and he kind of admits it. And I'm wondering whether that becomes self-incriminating. I don't know if you can take the fifth on that one, but and that, I think that's the problem with. It's sort of sad to me because crypto could work as an alternative currency or store of value, but I think so because of the hype and the speculation that's occurred, you've created all these sort of ancillary weird spaces here with people trying to do things like what they've done. And even Bankman-Fried a few weeks ago, when What was the other, Chris? What was the other exchange that starts with a V? I'm trying to remember the name. What's the name of the exchange that went under that they were actually going to buy out?
There was
Started with the V. I'm trying to remember.
yeah, I'm trying to remember. Yeah, basically they well, finish your thought, and
Well, he's
I'll add something.
basically, they were going to buy, FTX was going to buy those guys out and save them from bankruptcy, but they're not going to be able to buy anybody out because they need to be bought out by somebody else. But the basic issue here is that you have this guy, he was even saying a few months ago that when that particular company went down, that there are other crypto exchanges that are stealth bankrupts or are suffering from stealth insolvency. And now you look at it and you wonder if he was describing his own company. So, but all that needs to be cleared out. And somebody, I read one article, a good point was made. It's like, yeah, this needs to be cleared out of the system. So it's part of the evolution of crypto in terms of cleaning out all the BS and getting it back to its pure state. So, but that, and you don't know where that's going, so that could also roil the market. So it's just another bizarre black swan. But it's what happens in bubble markets. A lot of weird stuff goes on, and then it all, as they say, when the tide goes out, you find out who's swimming naked. Apparently, FTX was swimming naked. Go ahead, Chris.
Yeah, there's going to be some other similars out there. I mean, all these new technologies, based on history anyway, have a lot of these types of bad actors. Not that they're intentionally trying to be a bad actor, but sometimes their ignorance of their own or sloppiness, it can create a cascade of a domino effect that results. And that's what we're seeing here with the takedown of his exchange and all the people who were exposed to it. And, again, I go back to 1995, and I remember still when the very idea of buying something on the internet was considered foolish because you'll just get your credit card stolen. And there was a lot of bad actors on the internet back then. And, the whole system had to be cleaned up, regulated. And I've always said, regulations are coming fast and furious, finally. I mean, government is the slow animal in the herd, but the regulatory environment will help the crypto space mature. And so I think we're going to see a lot more of very clear-headed and proper rules being administered to the space over the next 12 to 24 months, so people don't have question marks, because so far lawmakers have been really nefariously, vague. There's a lot of vagueness to the law, and a lot of it's subject to interpretation. So that also needs to be really cleaned up. There needs to be much more definitive law that is put in place in the US and globally. And then we can move forward. And there'll be much less of these catastrophes as a consequence.
Anyways, are there any other questions from anybody? Because we can just wrap this up. But I gave you an idea of something to consider, which is if this rally does give way, then look at groups of stocks and monitor the individual charts, just as I showed you using semiconductors as an example, and using big stock NASDAQ names as an example, and use the corresponding inverse ETFs. Now, if you think they're going to continue going higher, then you would use the corresponding long ETFs, and that's basically it. Somebody says possible short AMD at 50 DMA. Let's take a look at some of these. It's not really reversing at the 50-day line. Someone has a question, Chris. Are there self-regulating standards in the crypto world, or is it just the Wild West until the law sets in? It needs community standards.
Yeah, sure. There's, of course, a lot of it is driven right now communally. So if a bad actor is identified, people are really ruthless about identifying that person. And so that's always been part and parcel of crypto, and that's kept a lot of negativity out. But nevertheless, you do have, sometimes these issues surface. We've seen a number of them in the last 12 months. And Sam Bankman-Fried is the latest in this slew of parade of bad actors. But yeah, I would say that the space is self-policing in many regards, and you can see this just based on who you follow on Twitter. There's some good voices of reason out there, people who will, you know, take no prisoners if they see something is wrong, and you'll get also follow-on effect of like when you publish an article in a journal, you need peer review to legitimize it, and you definitely, if you see someone making some claim against someone, there better be a backup. There better be some source of evidence. Otherwise, it's just FUD. And I use Twitter strategically in that sense. So if I see a news item come through, I want to see some proof of that news item. So it's a lot more rigorous than say what we see in mainstream media. And anyway, I think that the laws, once in place, will greatly facilitate the maturation of the whole space.
We got another question. Can we short CALH now that it's below the 50 DMA? My view is that if you have to ask, then you have no business shorting. Just shorting it because it's below the 50 DMA, to me, shows, number one, that you don't understand short selling, because there was already a short at the 100 level earlier today. So you're already now down almost 12 points from the peak of the day. The next short sale entry trigger would have been right at the 50-day line. If you want to short it here, then you would use the 50-day line as your covering guide, okay? So it's a concrete setup. It's not a matter of you asking us if it's okay to do it, because if you need to do that, then you shouldn't be shorting, okay? And I always encourage people, get off this kick of having to get somebody's approval for a trade, because if you don't understand the setup and how it works, then you're just stepping into you're jumping into a pool and you don't know what's on the bottom, and you don't really understand what you're doing. You're just relying on someone to say, oh yeah, go ahead and short it here. Yeah, you'll be fine. Don't worry. And that's, to me, is just dumb. Okay. For lack of a better word, it's just dumb and it's lazy. So, you know, don't go there. Understand the setups as they're occurring, because then you'll see them in real time rather than having to rely on somebody telling you when they're occurring. So, you know, I think if we had put out on last Thursday, a week ago, the undercut and rally reports on gold and silver, anybody who, you know, is a little bit savvy could have figured out that, okay, if those are going to work, then maybe I can buy a miner or two, or the GDX, and participate that way as well. So there are a lot of ways to skin a cat, but in terms of short selling, I think you really have to understand the setups, and you have to be Johnny on the spot and hit them perfectly. Anyway, somebody says, is there a video on shorting I can review? There's an entire book, Short Selling with the O'Neill Disciples. If you go on the internet and search for O'Neill Disciples and short selling, you might find an old video somewhere. But a lot of that is outdated, because the current definitive work would be Short Selling with the O'Neill Disciples, and that's what you can read. So, you know, if you have questions like, where can I find this or that, just search on the internet. You know, I'm always amazed at how people don't really do that basic thing. You know, it's like, oh, what's a BGU? You know, it's like, well, why don't you just search on the internet? You know, let's type in our names in BGU and you'll find out what a BGU is. If you want to find out about short selling, type in our names in short selling, and you'll probably find a bunch of different stuff that you can look at. But short selling requires, I think, if you're going to start doing it, you need to be doing it slowly with small positions and not risking a lot of your capital, because you need to learn. It's very difficult and requires a different sort of psychology and mentality than just playing the long side. So anyways.
Yeah, the other thing is, especially in light of, you know, shorting crypto, which I always said is rocket fuel. And yesterday we had lots of news that Solana was going to, there's 50 million tokens of Solana that were going to unlock this morning. Well, this morning EU time, so that would be post midnight Pacific Standard Time. And so this great hope that, okay, well, Solana's already sold off a lot, but it's got to sell off even more. So there was a lot of short interest in there. And now I'm looking at it, and Solana's up 33%. Well, I think part of that is short covering rally, because there were so many people convinced that Solana's got to sell off because there's going to be 50 million tokens unloaded into the market. But there you go. You know, you have all kinds of riptides, especially that are amplified when you're trying to short crypto. And another example is actually FTT, the actual token itself, which is now up 83%. So, you know, the idea was that there's $8 billion in the hole that's missing, and FTT's got to go to zero, kind of like we saw with Luna. So again, there were tons of people trying to short FTT. And by the way, I did short both of these yesterday when things were kind of falling apart because, well, the market was on my side. And I do have rigid risk control so that if for some reason either one were to have deviated from the downtrend and started uptrend, and you know, I've dynamic moving, I use all kinds of things to make sure I'm out of the position so I don't get killed. And you have to have that in place, whether you're shorting stocks or crypto, but especially crypto moves so fast that you got to be on it. And it's really, it's not something you can really look away from, you know, go have lunch. I wouldn't be doing that with crypto. You have to be on it. So anyway, these things are up monstrously today, despite the stories that came along that suggested both have to go a lot lower. So there you go.
Yeah, and I would say any of you who have technical questions about crypto, email them into Chris, and he'll be happy to answer, won't you? Anyways, that's all I've got. So, you know, that's the basic things to watch for. Meanwhile, we're just riding the wave in precious metals, and we'll just see where this rally goes. But man, this is a crazy market, and don't expect it to get any less crazy. So that's all I've got. Have a great day, and we'll catch you guys next week. Take care.
So long, everyone.